You ever see a Forex broker advertising some absolutely insane leverage, like 1 to 3,000 or even higher? It sounds amazing, right? Almost too good to be true. So, what is the real story behind those massive numbers? Today, we're going to peel back the curtain on high Forex leverage and figure out if it's a golden ticket or just a clever marketing trap.
And yeah, you're seeing that right. Unlimited. It's the ultimate marketing hook, isn't it? The idea that you can control these huge positions with just a tiny bit of your own cash, the promise of massive profits is, well, it's incredibly tempting. But it really makes you wonder, is it actually that simple? And that, right there, is the million-dollar question. What's the catch? Because whenever a deal looks this good, the devil is in the details. So we're going to dig right into that fine print, into all the conditions and restrictions that brokers don't exactly shout from the rooftops. Look, the high leverage itself is real, but it is not a free-for-all. Not even close. Brokers have a whole bunch of rules in place to manage their own risk. So let's break down the 5 biggest catches you absolutely need to be aware of. Okay, first up, and honestly, this is probably the most common restriction you'll find, your account size. Now, this might sound kind of backward, but the more money you actually have in your account, very often, the less leverage you can get. Let's see what that looks like in practice. So this chart makes it super clear. It's a complete flip-flop. That mind-blowing 1 to 3,000 leverage, that's typically reserved for tiny accounts, maybe a couple $100. The second your balance starts to grow, boom, your leverage gets slashed. This tells you a lot, right? That headline number is really a marketing tool to get new traders with small deposits in the door. All right, catch number 2. This is a slightly different tactic that some brokers use. Instead of limiting leverage based on your entire account, they limit it based on the size of every single trade you make. And they have a specific way of calculating this.
So this brings us to a key term you've got to know, notional value. It sounds kind of technical, but it's really simple. It's just the total real-world value of your trade. So if you're controlling a position worth $100,000, that's its notional value. The formula is just the contract size times the current market price, and brokers use this number to set their limits.
Let's just walk through a quick example so it makes sense. Imagine you want to trade 2 mini lots of the euro/dollar. We do the math, and the notional value works out to be just over 23,000. Now, if your broker says, hey, we'll give you 1 to 2,000 leverage on any trade under 50,000 in notional value, then you're golden. This trade qualifies. But if you try to open a way bigger position, you'd get knocked down to a lower leverage tier. Simple as that. Okay, now for our next couple of catches, because these two are pretty intertwined. It's not just about how much money you have or how big your trades are. Your leverage also really depends on the type of account you choose and what specific things you're trying to trade. Brokers offer a whole menu of account types, right? You've got your STP, your micro, your ECN accounts. And guess what? You'll almost always find that the highest leverage is offered on the entry-level accounts, like your micro account. Those premium ECN accounts, the ones that serious traders often prefer, they usually have much, much lower leverage, often capping out around 1 to 500.
And this is another huge piece of the puzzle. That 1 to 3,000 leverage plastered all over their website? Yeah, that's almost always exclusively for major Forex pairs. If you want to trade gold or indices, or especially something volatile like crypto, you can just forget about it. Your leverage is going to be way, way lower. We're talking sometimes as low as 1 to 10. But now we get to the single biggest factor of them all. The one thing that overrides everything we just talked about. And that is where you live. Financial regulation creates this massive, massive gap in the world of Forex leverage. I mean, just look at these numbers. It is night and day. If you're a regular retail trader in the European Union, you're capped at 1 to 30. In the US, it's 1 to 50. But if your broker is regulated by an international body like the FSA or IFSC, that's where you see those eye-popping 1 to 3,000 plus numbers. And the reason is pretty straightforward. Regulators in places like the EU and the US decided that super high leverage is just too risky for most people, and they capped it to protect them. So this obviously leads to a big question, right? If you're a trader in a super regulated area like Europe or the United States, are you just out of luck? Is there any way to legally get your hands on higher leverage? Well, it turns out there are a couple of ways. It really just boils down to 2 main options. The first route is to prove that you're a professional trader, and the second, more common way, is to use an offshore branch of a broker. Let's quickly break down what both of those really mean.
So, to be considered a so called elective professional client in the EU, you have to hit at least two of these three incredibly high bars. We're talking about having a portfolio of over €500,000, a proven history of making large trades frequently, or having worked in the finance industry. Let's be honest, for the vast majority of retail traders, this is just not going to happen.
So that brings us to the more common path. A lot of the big brokers operate all over the world, with different branches under different regulators. So a trader in, say, Germany could choose to open their account with that broker's international entity, which might be based in a place like Belize. This legally puts them under that country's rules, which allows for much higher leverage. The thing to remember, though, is that this can sometimes mean you have fewer investor protections.
Okay, so we've got all these rules, all these conditions, all these catches. With all that in mind, let's take a look at a few of the brokers who are actually known for being at the top of the high leverage game right now.
So here are a few of the heavy hitters. You've got brokers like Alpari and A Markets that go up to 1 to 3,000. And then, as we saw right at the beginning, you have FX Pro, which has that unique unlimited leverage marketing angle. But of course, that comes with all the conditions and catches that we just went over. Want to dig into the details? Check out our full article on offbeatforex.com. The link's right in the description. So what's the big takeaway here? Ultra-high leverage is a very real thing, but it's a very specific tool. Whether you can even get it depends on your account, your trade size, what you're trading, and most importantly, where on the planet you are. It's a classic double-edged sword that can amplify your wins, but also, just as easily, amplify your losses. So the real question isn't just can you get it, it's should you use it? And the answer to that really comes down to your own trading strategy and your personal tolerance for risk. Thanks for tuning in to this explainer.